A crash, whether in stocks or crypto, can be a time of high stress and anxiety for many people. No one wants to lose any of the investment gains in the months leading up to a big drop. Now, instead of just burying our head in the sand or thinking that even talking about crashes is just fear-mongering or spreading the FUD, the reality is that crashes are a big part of investing. We will always have day and night, summer and winter, and we will also continue to have booms and busts. The truth is that it's only a matter of time until we get another big crash in crypto, which is why I think it's better to regularly discuss, be ready, and prepare the best way we can. And so in this video, we'll be looking at why we even have crashes and why do they keep happening, 2 potential crash events on our horizon right now, and what we can do to help lower our risk and prepare for a crash. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, have you ever stopped and wondered why we even have crashes in the first place? As they are such a big part of investing, it's always good to learn as much about them as we can. And this also includes the psychology behind them. Ready? Let's do this. I think the reason we have crashes, and why we'll continue to do so again and again, is for 2 main reasons. At the core is the fact that we are emotional creatures that think, and not the other way around. The oldest part of our brain, the limbic system, which controls the fight, flight, or freeze response, is the oldest and strongest part of the brain, and unfortunately, it's the part that is unconscious. And in times of fear, uncertainty, and doubt, it's this part of the brain that gets triggered, causing people to panic sell as they don't want to lose out on any of their investment gains. And the second part, as with most things in life, is things happen in cycles. We have the actual value of the asset, which is what everyone is trying to figure out, similar to this line going through the middle, and then we're always in a state of being overvalued, then undervalued, then overvalued. Everyone jumps in when things are going up, shooting the price even higher than its value. Then fear and panic sets in, we don't want to lose our gains, and people begin panic selling, which drops it back below its true value. And this repeats again and again. So our brains and nature are not going to change anytime soon, which is why we get booms and busts. And then add into this mix black swan events. The first catalyst that could spark a crash is regulation, as the truth is that 90% of cryptos do pass the test of being a security, and so in the eyes of the SEC, they should be regulated. We also have the upcoming infamous infrastructure bill, which included a very ambiguous statement about crypto brokers, which, if acted upon, could throw a large spanner in the DeFi machine and bring the whole market down. So there are a number of regulation bombs which could happen at any time, which could certainly bring the market down. And the second catalyst looming is a stock market crash, as stock prices are at crazy high levels. The Buffett indicator, which divides stocks by GDP, is flashing warning signs as it hits historically high levels. And then we have all the unknown events, like what happened with COVID, or with China shutting down the Bitcoin miners, or most recently right now, the collapse of property giant Evergrande is already impacting the global markets as I record this video. The point is that a big crash between now and Christmas isn't something we can just ignore and pretend doesn't exist. We always have to prepare the best way we can. So the easiest thing you can do to help lower your risk is not to overextend yourself with your crypto allocation. Remember, crypto is classified as a high-risk asset class. Now, risk is different to volatility, but because it's so volatile, it does give you more chances where you can panic and sell at the wrong times. So based on your circumstances, don't over-leverage yourself, only invest money you can afford to lose, and this amount is different for everyone, as we always want to make sure that we're investing and not gambling. Now, something else I do to help lower my risk is I work around 3 main phases: times of accumulation, times of holding, and times of selling. So for me, when the market crashes over 50%, we enter a good time for accumulation. And you'll notice this is when most people are panicking and selling. From there, we go into phase 2, which is time for holding or hodling, which goes on until the market recovers and begins setting new highs. And then from there, as the market begins to set new highs, you choose when you'll be taking profits, or you could be just hodling on depending on your plan. And third, you can reduce your risk by just investing in the large cap assets. So things like Bitcoin and Ethereum, they're like the Apple and the Microsoft of the crypto world. And anything below the top 20, they're like the small caps, the micro caps, and the penny stocks. So they do come with a lot more risk. Now, I have to say, this is not investment advice. This is just how I help reduce my risk and deal with all the volatility in the crypto market. The reality is that crashes are a fundamental part of investing, whether we like it or not. So instead of burying our head in the sand, it's better to acknowledge this, discuss crashes often, and look for ways we can prepare and even benefit from crashes. Crashes often give you the best investment opportunities you will ever get, which is why they're a topic I will continue to visit on a regular basis. Now, no one knows what will cause the next big crash. It could come from regulation, a stock market crash, or some other black swan event. Be sure not to overextend yourself in your crypto allocation. Reduce your risk by buying after a crash event and taking profits when the market sets new highs. And panic selling is probably the worst thing you can do. Now, having said all this, I still do believe that the long-term trend for crypto is going so much higher. It's just that in the short term, we do have to deal with a lot of volatility as we switch from fear back to greed, greed back to fear, as it's all part of the equation. So there you are, guys. Hope you enjoyed. Let me know how you prepare for crash events below. For now, just to say, if you did enjoy anything in the video, then don't be shy, drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.